Hey yo, good evening viewers of the tube. My name is Tyler and welcome to the channel that is just in as much shock as you are in the Bitcoin price. What in the world is going on? Let's find out because it's time for Chico Crypto. So let's begin today's episode with talking about the Bitcoin price action because yesterday it was on a literal tear. Just a few days ago, I was talking about 10K, and as of shooting this video, we had smashed through 13,000, and 14K was in sight for a short amount of time. Bitcoin has bounced back with a vengeance since hitting its all-time low in December of last year. Is this sustainable for Bitcoin's price to 4x in a matter of 6 months? The more you zoom out on the charts, the crazier it looks. Just a straight up vertical parabolic rise. Since I've been around crypto, this is an uncharacteristic rise. The all-time high for the previous bull cycle was on December 16th, 2017. Bitcoin's all-time low for this last bear cycle was on December 15th, 2018. It took a year, or 365 days, for Bitcoin to reach its bottom. Now, comparing this bear cycle with the previous one from 2013 to 2014, you can see they are similar in length. Bitcoin's all-time high was on November 30th, 2013, and the all-time low for this cycle was on January 14th, 2015. It took over a year, 410 days for Bitcoin to reach its bottom. The difference in length was just 45 days. Now, as of today, we are 193 days since the bottom, and we are just negative 34% away from the last all-time high of around 20K. Is this similar to the previous cycle? Bitcoin hit its bottom on January 14th, 2015. 193 days later was on July 26, 2015. What was Bitcoin's price? It was around $292. The all-time high in November 2013 was $1,165. This means Bitcoin was still 75% away from its all-time high. This is a 41% difference and shows Bitcoin is on a rapid pace compared with the previous one, which had similar bear market lengths. Although I have only been around crypto since late 2013, there have been other bear and bull cycles, which we need to talk about. The first one, which we haven't mentioned, was in 2011. This bear market took a lot less time to reach its bottom, only 163 days. Then this chart shows us it also took a lot less time to reach its all-time high again, 625 days, when compared with late 2013's bear than bull cycle, which took 1,125 days. As of right now, we are 558 days since the all-time high of 2017. If we chart the red line out to today, the current bull cycle seems to be following the bull cycle that happened after 2011. The last bear cycle is characteristic of late 2013, and this bull cycle is characteristic of 2011. Will Bitcoin continue the trend and reach its all-time high again in a similar amount of time like in 2011? If this is the case, then Bitcoin will reach nearly 20K again in 67 days on September 2nd, 2019. And by the looks of the recent price action, this is not out of the realm of possibility. What's a person to do when there is FOMO nipping at their heels? Stay cautious, my friends. Almost every single person I have met who has tried to time the market, buy the dip, take profits, and go into a new coin, use leverage, or do anything other than just be patient and stick to their strategy has ended up with far less wealth if they had just kept it simple. A good example of keeping it simple is cost averaging, buying no matter what the price is on a set schedule. By setting aside an amount you can afford and investing that in, you average your price and spread out your risk of entering the market at a less than opportune time. A good place to see the benefits of this is at Bitcoin Savings Calculator. You can put in an amount you want to put into Bitcoin every certain amount of time and starting on a certain date. So let's say we started buying Bitcoin at the all-time high on December 17th, 2017, and put in $20 every day. This would mean we would have 1.8322 Bitcoins worth over $20,000. And as we can see below, the total spent or invested so far is $11,140. If you would have FOMO'd in at the top in December of 2017, with that $11,140 investment, it would only be worth about $7,685. The value of cost averaging is severely underestimated, and many people could benefit by just simplifying their strategy. The main reason I am saying you should be cautious in this market is because of what happened with the last one. Many people FOMO'd and got wrecked. We still aren't clear on whether the last bull run was completely organic or fueled by Tether. A few days back, I talked about how institutional involvement could be the fuel that is contributing to this price run. But today, we need to understand that this could be Tether once again. Since Bitcoin's last all-time low, the Tether supply has more than doubled, with the current circulating supply being over 3.57 billion. Just in the last month, there have been 600 million in Tether issued. Could these prints be fueling the pumps? That is a definite yes. Even the CEO of Ethereum, Will Harborn, agrees they are connected. When asked if the recent Bitcoin price rise and recent Tether prints on the Ethereum blockchain were connected, he said, absolutely. Now, if you didn't know, Ethereum is a subsidiary of Bitfinex, the Tether overlords. So Will would have some insights into the relationships between Tether, Bitcoin, whales, and a bull market. Will goes in deeper and says this is how it works. Whenever you see a large Tether print, it means a handful of wealthy clients have essentially pre-ordered batches of Tethers to buy up crypto on the market, often before it has began to surge. They use Tether because the high liquidity exchanges don't usually accept fiat. So if this is the case, and it is actual big clients buying it up, who are these customers? According to Harborn, some of Tether's biggest customers are over-the-counter trading desks, who privately buy and sell large quantities to investors or large-scale traders. My question is, why don't these large-scale investors and traders just skip the OTC middleman and go directly to Tether? Those were all the details Harborn disclosed about Tether's customers, but many people out there have a feeling that the buyers of Tethers are market manipulators in cahoots with Tether. The infamous Bitfinex put it nicely. He said, nobody buys Tethers. Bitfinex will issue Tethers to their traders for market manipulation. Market manipulators pump and dump and then pay for the Tethers once they have made out like bandits. All I have to say is we have to be cautious and aware of what is going on in the markets. It would be painful to learn that this entire run is being fueled solely by Tether and their whale manipulation. But if it is possible, we need to continually investigate and hear what the players are saying. It's called looking at both sides of the coin. Cheers, viewers. I'll see you next time.